Hi, everyone. Welcome back to our podcast, The Ins and Outs of Selling a Business. For those of you just joining us today, my name is Keith D. I'm president of Osage Advisors. Osage Advisors is a investment bank, merger acquisition firm, working with business owners and their families looking to sell. We've been around for almost 21 years now. In fact, our 21st anniversary is just around the corner. We typically work with clients with $5 million in revenues and up. Today, we're going to continue our conversation with Megan Trask of Connecticut Wealth Management. Megan, welcome back.
Thanks, Keith.
Appreciate you taking the time. Connecticut Wealth Management is a financial planning wealth management firm based here in Farmington, Connecticut. And the way we left it off in our last podcast is we talked about the critical role you guys play in preparing the financial plan for your clients, mainly business owners. So today I want to delve a little bit into, our current market conditions. There's a lot going on.
Yeah.
I mean, inflation, interest rates, obviously the market. I think I read a report the first 6 months of 2022 was the worst market performance since 1970. Yeah. There's geopolitical issues going on, and it has a lot of people concerned. People think, 53% of CEOs think we're going into recession, and I heard something on the radio driving in today where an exorbitant amount of entrepreneurs or business owners think that we are definitely going into recession. Yeah. Challenges create opportunities. You have laid out plans. You've worked with clients 5 years, 10 years, maybe even just 6 months, and now you kind of have to revisit those. So how do you address, we're in choppy waters right now. No one really knows where we're going to be in the next 3 to 6 months. How do you guys work with your clients to kind of ease their concerns and maybe rejigger their plans to kind of get them comfortable?
Yeah, really relevant question in today's market, no doubt. Really key to navigating the current markets is to make sure we're doing the prep work ahead of time. So, every new client that walks into our office, we do a full-fledged financial plan. We have a deep understanding of what our clients' goals are, what they're trying to accomplish in their life, and what that means they'll need from a dollar perspective. And we really build an investment plan and a cash flow plan that matches that. And so while we're building out that plan, we are stress testing and we're setting the right expectations for our clients that markets like these aren't inevitable. I hear every single day in my office, and I hear it and see it on the headlines, folks and analysts trying to describe that now is different, right? This market is different. We've got all the inflation and Ukraine, and there's all these things that have never happened before, and that's absolutely true. But if we think back to headlines in 2008 and early 2020 and as far back as the Great Depression, it always feels different. What causes recessions and what causes downturns in the market, it always feels different. But these are a relatively normal part of full market cycles. Market downturns, 20% declines are a full part of full market cycles. Recessions are a full part of market cycles. So we need to set those expectations appropriately for our clients, and we need to build plans that assume that is going to happen and literally show them, this is what your plan looks like when this type of event occurs. This is what we will do. This is how you're invested to be able to weather through that. And then when the market actually occurs, it's reminding them of that. If we didn't think a recession or a market downturn was ever going to happen, we'd be 100% in stocks, right?
Right.
For most of our clients, as you might imagine, we're not, right? There are some safer investments that our clients who are living off of their portfolios can draw from during these times. So it's really going back to the plan, going back to the stress tests that hopefully we've already done and showing them, here's where we are and we've planned for this. There are some small tactical things we can do in the portfolio, but that planning piece in advance is the most critical factor to weathering these types of market environments for sure.
Yeah, so from our perspective, right, so 2021 was the most active year in M&A. Valuations were up. The number of deals getting done was just astronomical. In fact, the support teams, the lawyers and accountants, and even insurance people they were like booked out. They couldn't do anything else. So everybody, coming in 2022, everybody took a quick pause just to kind of, just regather. They just were just exhausted from all the work. And 22 started off M&A, a little softer, but it's actually picking up now. But, it's clearer based on what we're seeing that, valuations had peaked. They're not dropping precipitously like they did, like what the stock market did in 2008 and the real estate market, things along those lines. But they are changing a bit. And so when we're changing it means that's going to affect value because there's certain skepticism. So it's going to kind of come into how we structure deals that meet for our clients' goals and objectives regarding their lifestyle and post-retirement. And some of these clients, they can't put it off.
Yeah.
Right? It's like they're older. They may have a health issue. Unfortunately, it happens, or their spouse, or they just had it. I mean, we're seeing a lot of clients come in today, and I'm sure you are too.
Yeah.
That are just, I don't want to go through this again.
Yeah.
I've
Between
been
COVID and political environment, there's just so many challenges for business
they
owners.
baited through 2008.
Yeah.
The pandemic. They thought they were free and ready. I'm like, I can't do this anymore, right? Yeah. So they come into you and they say, "Here's my, what should I be doing?" And how do you address that kind of question with them? Because I'm sure you're getting your phones are ringing, and they're like, "Okay, what do I need to do? I can't be here anymore." We're getting those calls, but not from your perspective. We're saying I need to get out.
Yeah.
Right.
Yeah. Well, I would say in advance, I think 2021, part of what we were doing is for any of our business owner clients who we started to hear those sentiments from or who have expressed, hey, sometime in the next couple of years, I'm probably going to be ready to sell my business. We wanted, because we're in touch with folks like you, because we're staying in touch, with what's going on in the environment, we were proactively reaching out to these folks and saying, hey, valuations look really good. You thought you might sell the business in 2 or 3 years. Geez, the sun is shining now. Perhaps you should think about a sale.
Right.
So that's in advance. As you mentioned, maybe valuations aren't quite as high. So I think 2 things. One, having those clients still continuing to reach out to folks like you to actually test that, because we've had several clients go to market in 2022 and valuations have been pretty close to what they thought they were going to be last year. There seems like there's still capital out there. Seems like there's still transactions.
There's a lot of capital in the market right now. For everything you're hearing today about, stock market's down, interest rates are up, inflation, of course, is at 9.1% last week or whatever it was. Yeah. The amount of dry powder or cash sitting in private equity, institutional capital looking to invest is still close to $1 trillion. Yeah. And that's not even the strategic buyers. That's just institutional private capital. And they're raising funds every day. Yeah. So the markets are flush with cash, but they're being much more selective in their approaches. Yeah. So deals, just like a housing market today, where 6 months ago you put a house, before you even put the house on the market, it was sold. Now you're saying, okay, it's getting, it's a month or 2 months before it sells. The values come down a little bit, but from your perspective, you're seeing those things. And how does that kind of plays into the whole planning, right?
Well, I was going to say one of the interesting pieces of context that I think we're adding for business owners right now is maybe you've seen valuations come down a little bit in terms of your business, but wow, what an opportunity to redeploy proceeds from a business into a market that is down 20%. And had they sold last year, right, in 2021, investing into a market that was higher now over 20 years, that's fine, right? There's no impact. We still would have said, hey, invest proceeds into the public stock market in 2021. But in 2022, valuations for private transactions seem to be holding up okay, and you actually have a chance to redeploy some of those proceeds into a stock market that's down. So that's actually a welcome, sometimes just thinking about it that way, right? Isn't investing all about trying to sell high and buy low? For a lot of business owners right now, and real estate investors actually too, there's actually an opportunity to do that in our minds.
Good. So how about the clients that, sold last year, right? Or sold the year before, or sold 2 years ago. And so they're, say they're It could be 60 now or 65 or 67. They got a lot of concerns.
Yeah.
So, they're calling you as well,
Yeah.
right? Because it has nothing to do with their business. They're already out, or maybe they're in a consulting agreement, or they own a small piece of the business, but they've taken some significant amount of chips off the table, and so they're looking for what should I be doing? What kind of things are you talking to them about? Alternative strategies, whatever. I mean, you can't test a market. We talked about that. If you try to test a market, you're never going to. Try to time the market, not test it, time the market. You're not going to be, you most likely won't be successful, right? So how do you address that with the clients? How do you work with them on that?
Yeah, that's a great question, Keith, because I would say most of our clients have been through these types of markets before, and we don't get as many concerned calls as I think people think we might get, but if there is a cohort of people that are a little nervous, it is the people who just had these big life transitions, like selling a business and are living off a liquid pool of money for the first time. They don't have the experience, perhaps, of these types of downturns before, and so they are a little nervous. And what should we be doing? Again, hopefully we've set those expectations in advance that these things will happen, and we've invested accounting for that. So hopefully we've been diversified, right? And there are certainly some more conservative investments that have held up okay. Also, if somebody sold a business last year, it's very likely we didn't redeploy all of that capital right away.
Right.
We sit on some dry powder for environments like this. And some of the opportunities that we're seeing in this market, they're really all over the risk spectrum, which is nice. So even if you're a more conservative investor, we're finally seeing some opportunities in some really safe assets, even like really high quality bonds. CDs are starting to pay a little bit more. So even if you're not comfortable kind of diving back into the stock market or some other opportunities, there's actually some conservative ways you can earn a little bit more on your money. And then certainly if you're willing to, stomach a little bit more volatility and take on a little bit more risk, we're actually, for business owners who sold last year who are sitting on cash, we are proactively recommending adding more to stocks right now. Once you see a 20% decline, there's a lot of good data that suggests the bottom might not be too far out, and over a 3, 5, 10-year period, it's a really good time to put money to work. The other area, and you actually alluded to this a little bit, we've been pretty bullish on the venture capital space for our clients. So for qualified clients that meet kind of SEC requirements, for clients where an investment like that fits within their liquidity needs, because it's very different than a public market investment. Valuations have come down a little bit in venture, and we think over the long term that's a really great place to have an allocation, particularly for entrepreneurial like business owners who are perhaps more comfortable with that type of risk.
Okay, so let me throw this one at you. So we from our business, it's we're all about communication and being available 24/7. But there are times, I've said in many of our transactions where our clients go like radio silent, and to me, that's not a good thing. Something's bothering them. So I usually call it my 9 o'clock Friday night phone call. And we've talked about it in the podcast before. Is that okay? What's going on? Right? What is it that it could be either a legitimate, they're all legitimate concerns, but you may have misinterpreted it, or you're not, you didn't hear it the right way, right? So we would pick up the phone and find out what, I'd proactively call. If I don't hear from a client when we're in due diligence and he or she disappears from the radar, I know there's a problem.
Yeah.
And so, okay, what's going on? So you got clients calling you because they want what's going on. Yeah. How about the clients that all of a sudden are just like go into that deep dark hole, that closet during these kind of times? They don't want to know what's going on.
Keith, that's such a good question, and it's funny. We've actually been looking at studies on this because it's in our industry, it can be a fine line of we want to be proactive, we want to reassure clients, we want to make sure nothing is bothering them. But for us in the world that we're in, there's been studies that show some financial advisors reaching out about down markets sometimes actually invoke anxiety. So sometimes clients are almost ignorant in their bliss, and they're like, hey, I really don't want to look at my statement until this market recovers. You tell me if I need to be concerned. Otherwise, I'm going to, keep enjoying my life out on the Connecticut shore, down in Florida, or wherever they are. So we find ourselves in this delicate balance of wanting to reassure our clients, remind them of the stress testing that we did, and this is a normal part of markets, and here's specifically why in your investment plan you have nothing to worry about. But also want to respect sometimes their desire for, I don't want to look at my statement. Now for the business owner who's in the middle of a transaction, they can't afford that luxury of kind of tuning out the noise. And so it's back to the plans. And, one of the most common exercises we're doing with clients right now, business owners included, is, okay, we've built this plan. We expected this valuation. We expected these market returns. That's clearly not reality. So let's assume that we are going to get a 10% or 20% discount on your business, and we're going to see below market returns for the next 10 years. And we can overlay those types of stress testing on a client's plan.
Mm-hmm.
And for a lot of our clients who've been really diligent in saving, they still sometimes have enough to weather through. And so that peace of mind to know that, we absolutely think markets and the economy will recover, as it always has. But even if, we're wrong and it doesn't, and we see below, average returns, your plan is still sustainable. So that can be a really helpful exercise for business owners who are, struggling with making this decision in a more turbulent market.
Yeah, the emotions are running high. The anxiety levels are, through the roof. We're constantly on the phones talking to people and just say, okay, what do you need? What's important to you? So we can address that with the potential buyer to satisfy your concerns. And if they're not satisfied, then maybe we just pull back and then wait for a future date. And when things change, or you put things in plan to meet some of those challenges so that you feel in a better position. So. Yeah. You may have already kind of addressed this, but from we are in anxiety-driven times right now with the financial markets and the world, frankly, geopolitical, everything, supply chain, labor shortage. There's a lot of things coming at people, and we're going into an election cycle, so that's also going to be anxiety-provoking for a lot of people. Yeah. Any final words of advice to not just your clients, but people, on watching our podcast, or listening to our podcast today, of how to kind of get them in a place where they're, just comfortable.
Yeah. I think whether it's the business owner or anyone, right, having a plan that you can stress test, that you can come back to remind yourselves in the kind of the eye of the storm or the center of the storm that this plan hopefully was designed to get you through these types of events, and really coming back to that. I also love, you said this in your kind of opening dialogue, markets like this often present opportunity. One of my favorite statistics during COVID was I think we had the highest number of new business starts in 2020 ever, right? So we're in the middle of the pandemic, and we have more entrepreneurs than ever starting new businesses. I just love what that says about kind of American ingenuity and the entrepreneurial spirit. So yes, we're in a challenging market right now. There are opportunities. So kind of spinning the conversation, looking for those opportunities, reminding folks that those exist, and then bringing it back to their plan are really the keys.
Well, that's great advice, and I agree with you. We're a resilient society. It's a great country, and I read the same stat that the more businesses started in 2020 than in history. So it's just going to create a whole new group of business owners that are going to need to really focus. And as we said in prior podcasts, when you start thinking about your business is when you open it.
Yeah.
Because you need to plan from the get-go. Yeah. Not just about selling a bit, but there's major cogs in important aspects. And one of them is the wealth management aspect, financial planning aspect from the business owner's perspective and their families. So Megan, can't thank you enough for being with us. You provided some terrific wealth of information. Again, Megan Trask, partner with Connecticut Wealth Management, Farmington, Connecticut. Thanks for being with us today.
Thanks, Keith. It was a real pleasure.
Great. Thank you, everybody, for watching or listening to our podcast today. Again, my name is Keith D. I'm president of Osage Advisors. You can visit us on our website at osageadvisors.com, or you can email me with any questions at kdee@osageadvisors.com, or feel free to give me a call at 860-767-3273, extension 1001.